Hello everyone, today I'm going to tell you about some of my favorite stock picks for 2022. These are 10 stocks that have incredible potential and will give investors unbelievable returns over the next 2 years while they continue their climb up the ladder. So if you're looking for a good investment that's making me money, then these stocks are definitely worth checking out. So be sure not to miss out on this amazing opportunity. Before we begin, if you don't subscribe yet, please subscribe to our channel and hit the bell icon to get notified of our new videos. Alphabet Incorporated. The company is the most valuable large-cap growth stock on the market, trading at a price-earnings ratio just under 29% than the broader S&P 500 index. As a result, analysts predict that GOOGL earnings will increase by 24% annually over the next 5 years, compared to the 15% growth expected for Apple Incorporated, AAPL, Tech's belle of the ball, that trades at 31 times earnings. Google's core business of online advertising remains incredibly strong, while YouTube revenue continues to soar, up slightly more than 43% in the most recent quarter, and Google Cloud business is turning a profit. While it's true that cloud operations aren't profitable, on $4.99 billion in revenue last quarter, up 45% year-over-year, Alphabet logged a $644 million operating loss. Margins are improving and a swing towards profitability may represent an opportunity for investors. The fact that Alphabet's long and profitable Other Bets division, where it swings for the fences on big ideas, does offer the option of taking risks is also attractive. In addition, if the leadership gets sick of Other Bets and discontinues the division, that would have accumulated another $1.3 billion in operating profits in the last quarter alone. Medifast Incorporated. The next stock on the list of the best stocks to buy for 2022 is Medifast, a multi-level marketing company that manufactures, distributes, and sells foods that are intended to reduce weight. Medifast was also honored on the list for 2020, when shares returned 86%, and once again finds itself woefully undervalued after essentially trading sideways in 2021, despite an enviable year of growth that saw revenue rise by 52% last quarter. This is what you might call a growth at a reasonable price opportunity, since Medifast shares trade for less than 15 times earnings, while analysts anticipate earnings growth of 20% annually over the next 5 years. Aside from no debt, a sustainable dividend yield of 2.9%, and a company insider who recently bought nearly $1 million's worth of MED, there is little to dislike about this overlooked $2.3 billion growth and income stock. Grupo Aeroportuario del Sureste. I think it's time for something a little different. The last stock on our list of the best stocks to buy on our list is Grupo Aeroportuario del Sureste, an airport operator in Mexico. Operators, on the other hand, have no choice but to keep the airports running, and then to sit back and collect their share of the profits. Cancun, Mexico, San Juan, Puerto Rico, and Medellin, Colombia, are all airports owned by the company. The company reports that traffic at all its airports has already increased by 7.2% compared to November 2019. Omicron and future coronavirus variants may pose a threat to the company, but shares were relatively unaffected by Delta in 2021, and the company cranked out profits as Mexico did relatively little to combat the new variants. It can be summarized that ASR is an international mid-cap company and a dividend stock that is attractively priced, yielding 2% and trading for less than 17 times earnings. If you're a believer in a gradual reopening and steady return to normal consumer behavior, you shouldn't be surprised to see travel and the ASR rebound. EOG Resources Incorporated. It would be dereliction of duty if any person compiling a list of the best stocks to buy in 2022 omitted a pick which would benefit from inflation. With more than $50 billion in revenues, EOG is a U.S. oil and natural gas producer large enough to weather storms. It pays a sustainable 1.8% dividend and trades for less than 9 times forward earnings. The price of EOG trades at a 33% discount to its peak in October 2018, despite the fact that oil prices were practically the same. Investors should expect commodities like oil to rise further after November's 6.8% inflation reading, the highest in almost 40 years. Known as an efficient operator, the shale-driven EOG rose 82% in 2021 along with a 50% rise in oil prices. Visa Incorporated. The credit card giant Visa rarely offers enticing entry points for new investors, as the company typically trades at a premium to the rest of the market due to its impressive track record, high margins, consistency, and immense competitive advantages. However, after a slight decline in 2021, the share price has been totally flat since February 2020 highs. It is worth noting that the payments volume in its most recent quarter, the fiscal fourth quarter, increased from 2019 pre-pandemic levels, and the company confidently announced a 17% hike in its quarterly dividend. There are some scary recent headlines that may have contributed to the opportunity with Visa since Amazon.com Incorporated, AMZN, is suddenly planning to ban UK-issued Visa cards from its site due to high fees. According to the CEO of Visa, he believes that the conflict will be resolved. An increasing number of global travelers and a gradual return to normality will also be beneficial for Visa, which makes high fees on international purchases. Microsoft Corporation. When Microsoft was left out of everyone's favorite acronym for tech investors, FANG, the company was given a major disservice. Since Microsoft has long been a dominant force in PC software, the company was ordered to break up in 2000 after antitrust violations, but won an appeal and eventually settled with the government. It has since done well to dodge the brunt of the government's renewed anti-big tech sentiment. In the modern era, Microsoft is a cloud-focused company with nearly all aspects of its business aimed at improving its Azure cloud computing platform, the high-margin, rapidly growing service that's second only to Amazon Web Services as the largest cloud provider. Its monopolistic foothold in operating systems, Windows, and productivity software, Office and Office 365, allows it to generate regular cash flows that can be reinvested in the cloud. It is worth mentioning that the growth in segments like LinkedIn, up 42% last quarter, Xbox, Microsoft Surface and Salesforce, CRM, competitor Microsoft Dynamics are delectable cherries on top. In 2022, don't be surprised if Microsoft crosses the $3 trillion threshold with its $2.6 trillion company. Upstart Holdings Incorporated. Swinging for the fences is not for the faint-hearted, but it holds great promise over the long run. Upstart is an artificial intelligence-driven innovator in the credit score industry, a space long dominated by the likes of Fair Isaac Corporation, FICO Score. Upstart claims that the service reduces loan defaults by 75% for lenders that use the service. There is also behavioral evidence to support Upstart's technology, with its bank partnerships increasing from 10 at the time of its December 2020 IPO to 31 at the time of its November earnings call. Upstart's addressable market is also growing rapidly. Beginning with personal loans, the industry has now expanded into the much larger auto loan market, with larger fish, such as mortgages, likely to follow. The stock price is 22 times sales, so there is a lot of room for growth, but Upstart is already profitable, a rarity for a young growth stock. Lowe's Costs Incorporated. Next on our best stocks to buy for 2022 list is Lowe's, which we recommended in 2021. As people remodel, add on to, and otherwise modify their homes to accommodate these strange times, the housing shortage, red-hot real estate market, and pandemic should continue to act as bullish catalysts for the home improvement industry in the years to come. A stock such as Lowe, which has advanced more than 60% in 2021, still lives up to its ticker symbol when compared to larger rival Home Depot Incorporated, HD, which trades at about 28 times earnings, compared to about 23 times earnings for Lowe. While the company's sales are unlikely to grow in the coming quarters, revenue grew less than 3% last quarter as it lapped 2020's pandemic-fueled growth. The opportunity will be found at margins. As its net margins are somewhat lower than those of its larger peers, each incremental percentage point improvement will have a greater impact on earnings growth. The company's buybacks illustrate its confidence in its attractive valuation. The number of outstanding shares declined 8.2% annually. ASML Holding NV. The billionaire investor Peter Thiel, a founder of PayPal Holdings Incorporated, PYPL, and an early investor in Facebook Incorporated, FB, is notoriously hostile to competitors. Business and investors, in this view, should endeavor to achieve something resembling a monopoly. As a result, ASML, a Netherlands-based technology company now valued at approximately $320 billion, has a tremendous amount of valuable intellectual property. ASML is the only manufacturer of extreme ultraviolet (EUV) lithography machines, which are required primarily by semiconductor foundries and large chip manufacturers to manufacture the world's most powerful chips. ASML is the company at the forefront of the trend towards ever smaller, denser and more power-efficient chips. As a result, the barriers to entry are very high. ASML has spent decades researching this technology, and each EUV lithography machine costs about $150 million and is approximately the size of a bus, and demand remains high as the global chip shortage continues into 2022. Meta Platforms Incorporated. During the long term, economic conditions may either fluctuate or deteriorate, global political crises may arise, and in the event of an unexpected pandemic, one thing will remain constant: human nature. A company called Meta Platforms, formerly known as Facebook, is a bet on the ego of its users. In total, 3.58 billion people use at least one of the company's services, such as Facebook, Instagram, WhatsApp and Messenger, on a monthly basis, which is equivalent to almost 50% of the global population or about 75% of internet users globally. In fact, only two of those platforms, Facebook and Instagram, are meaningfully monetized, while monetization of WhatsApp and Messenger represents a tremendous opportunity. Facebook has made a pivot into betting on the metaverse, into which it will invest $10 billion in the coming year, which is the elephant in the room. Despite the fact that it is virtually certain it will take years for Meta Platforms to begin paying dividends, the stock is arguably the most attractive of the FANG stocks when it comes to growth and value. While this is going on, the ego isn't going anywhere. That's all for today. If you like this video, please give it a thumbs up. And if you want to hear more videos from our channel, subscribe and make sure to turn on the bell icon.